Welcome to Satya Skills. In this video, let us learn something about the limitations of Indian money market. A keen observation of the structure of Indian money market reveals several weaknesses and defects that block the contribution of money market to the progress of economy. Some prominent weaknesses are: the first one is presence of unorganized sector. The unorganized sector consists of money lenders and indigenous bankers who are free to undertake any operation. They are neither controlled by the central banking law nor by the government policy. Depending on the demand for funds, they extend their services. Example: to check inflationary trend, if RBI restricts organized sector from lending, the unorganized sector intensifies their business, taking the advantage of market conditions and lend more. No uniformity in the development is another limitation. Very important limitation of Indian money market is that it is not developed evenly throughout the country. In trade centers and metropolitan cities, it is very active, but in other areas, money market activities are insignificant or completely absent. Unbalanced growth creates challenges for the fast development of money market. Lack of uniformity in interest rates. Interest rates in Indian money market vary drastically from one region to another, from one segment of money market to another, especially in unorganized sector. Disparities in interest rates are not good sign for the development of money market. This exhibits the weakness of imbalanced growth in the money market. Another limitation is scarcity of funds. Indian money market suffers from another limitation, that the flow of funds into the market is always much below than the total requirement. Credit needs of the country are increasing at the faster rate due to the developments in the economic activities, but the institutional finance is very slow in its expansion. Gradually, the gap between demand for institutional credit and supply are widening. It has multiple effects on the income, savings, and investment pattern of the society. Scarcity for funds is primarily due to lack of surplus mobilizing mechanism in rural and remote areas. Low income, unemployment, poverty, overpopulation, resorting to unorganized saving agencies, etc., are primarily responsible for low savings in India. Another limitation is fluctuations in demand for funds. India is an agricultural country and 70% are farmers. Farm sector activities such as planting, harvesting, etc. are seasonal and cannot be postponed. It implies that 70% of population engaged directly or indirectly in agriculture requires credit facilities at the same time. Seasonal monetary stringency is responsible for several problems in money market. Example: development of unorganized sector, disparity in interest, etc. Such fluctuations are responsible for slow growth in money market. Absence of instruments is another limitation. A money market is able to attract investors from different income strata only when it is able to provide a large variety of suitable instruments. Indian money markets are characterized by the presence of different income groups and people with different investment priorities. Lack of sufficient variety of instruments is an important limitation of Indian money market. Absence of bill market is the major limitation. Bill market is the most essential part of short-term markets because it can stimulate domestic and foreign trade through supplying required timely funds. The following are the reasons for absence of bill market in India or less developed bill market. Majority of traders prefer cash transaction because they do not have banking facilities during early years of trade development in India. Commercial banks are also accustomed much to sanction cash loans to traders than discounting bills. In India, commercial banks are more accustomed to maintain liquid cash due to the policy of the Reserve Bank of India and also the banking habits of local trade and public. Indian banks prefer to invest in government securities than in trade bills. Heavy stamp duty on bills is another discouraging factor for the underdevelopment of bill market during early years. With regard to foreign bills of exchange, banks never depend on Indian money market. As all the exchange banks are foreign banks, they prefer London market to discount export bills. Absence of discount houses in Indian money market is another major reason for underdeveloped bill market. Usage of bills and hundis is another confusing state of Indian market. Majority of money market activities are confined to scheduled banks, example call market. Thus, the scope of money market is highly restricted to a few market players and is also responsible for limited bill market activities. That's all in this video.